Well, in this market, things can change pretty quickly. Yesterday, banks were having a good day on that news that we talked about, the lower capital requirements, 9% instead of the originally proposed 18%. Sounded like good news for banks. XLF opened up, but not for long. Next thing you know, the XLF, which tracks all the big bank stocks, went down more than 2.5%. We'll talk about the sell-off in banks. We'll talk about the debate's impact on different stocks and sectors this morning. Of course, it's a CPI day. We'll have Blu Putnam joining us at 8:30 a.m. Eastern to break down that data. What else do we have to discuss? GameStop earnings. We'll discuss some GameStop earnings as well, some crypto. So we've got a lot to talk about on this Wednesday. Let's go ahead and get the show started. Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All righty, traders and investors, welcome back to another episode of PreMarket Prep. Let's go ahead and bring Joel and his charts on the screen, see what the market is doing this morning. Joel, how you doing?
Good morning, Aaron. Good morning. Good morning. Here we are. Volatility in the overnight session. End result, we're down 8.5 handles in the S&Ps at 54.95 which I just think what happened yesterday, I think it's absolutely amazing that we're anywhere near 5,500. The buck, that's under a little bit of selling pressure here this morning. That's down 24 cents, 101.36. TLT over 101, up 47 cents at 101.16. Crude, it's up $1.48 and it's only at 67.23. Gold in the green by 750 at 25.50. Silver back over 29. That's up 55 cents at 29.17. And Bitcoin futures, they're down $1,265 at 56,930. Let's bring in our debate expert, Triple D.
Oh, I don't know about that. I did watch it. I don't know if I'm an expert on the analysis of it, but I can tell you the repercussions. The stock market appears to be an expert on it. So did you guys watch it?
Nope, I did not watch a single second of it.
Well, you didn't miss much because all it was just a yell fest at each other, basically. You know, just I don't know if I know anything further about either candidate's policies here. It was all just basically attacking the other candidate. I mean, that's all Trump did. Harris tried to talk a little bit about policy, but then she'd just go on attacking Trump too. It was just an attack fest back and forth. Joel, did you watch it?
I fell asleep.
Well, it was just painful. The whole thing was painful to watch. And like all you question is like, how are these the best two candidates that the U.S. could come up with in 4 years? The Dems and the Republicans. I mean, but, you know, that's probably going to tick some people off because we have some hardcore Harris supporters, some hardcore Trump supporters. I don't care for either candidate. Harris clearly won last night, you know, so whether you're Republican or Democrat, it's hard to argue against that. Some people are saying, you know, it was rigged against Trump because they were really attacking Trump. Obviously, the moderators seem to attack Trump a bit more. I'm not going to comment on any of this stuff because it just pisses people off. So we're just going to comment on how this affects the market. So Harris clearly won last night.
I just want to comment, and man, I'm going to have to dial up Mike France here. But you know who's absolutely cleaning up on this election so far? The ARBs. Okay? The ARBs. And Dennis, you got to figure this out and you got to do it. Okay, so you're looking, this is predict.org, right?
No.
Yeah, predictit.org. And this is, so what I was trying to show, because I didn't watch any of the debate, so I can't talk to the actual debate itself, but I can look at the price action. So this is just the last 24 hours. Before the debate, Harris was at 53 cents. Trump was at 52 cents. And then as the debate was going on, Harris went all the way up to 57. Trump dropped all the way to 47. So they were pretty much neck and neck going into this debate. And after the debate, now there's a 10-cent spread there. So now Kamala is at 56 cents. Trump is at 47 cents. So yeah, the betting markets are speaking. And again, I didn't watch the debate,
but
you gotta love the nickel of juice there too.
No, oh, I know. That's exactly. I've been talking about to Hayden about that to figure that out. But that's interesting. But go to polymarket.com. Okay, go
What
to
do they
that.
got going on? They different?
Well, at one point, they got it much
50-50.
different. Yeah.
How are they all different?
So, well, I think what it is that so Polymarket is a prediction market based on crypto, or that's backed by crypto, and you have to use crypto to do it. So I think inherently the crypto users are more like pro Trump, because there was a time where there was like a 10-cent spread between these two, but
there was.
I don't think Polymarket is available in the United States. Or at least it wasn't last time I tried to use it, which I was upset about because I actually saw this on Twitter yesterday. Someone was talking about it, that Polymarket had a market for will Taylor Swift endorse Kamala Harris, and it was only at like 70% yes. And I was like, that's the easiest thing in the world. Of course she is. I mean, if she endorsed Joe Biden in 2020, she's likely to endorse Kamala in 2024. And I wanted to bet on that. Yes, Taylor Swift would, which of course I did see this morning that she did end up endorsing her or endorsing Kamala.
So you know what this was yesterday before the debate, Dennis? It was like 50. It was 55-49 Trump.
Yeah, I think because it's part of what I said is that the crypto users are like more pro or more pro Trump.
Interesting.
Overall.
And you know what? Also, I did some research too on this. I guess you on predict.org you can have a limited account size, but on Polymarket you don't. And someone else posed that argument to me, but I'm like, well, if you can only have an $800 account, what prevents you from opening up 100 $800 accounts, right? So I just thought about the arbitrage opportunities there, and absolutely incredible. But enough
probably some opportunities there. I don't
but you gotta
specialize
do it
in
in
trading
crypto.
politics, but there's
You gotta do it in
opportunities
crypto.
there. So Chad doesn't want to talk, and I agree. I don't think we need to jump into Trump versus Harris, who are you voting for type deal politics, but we do need to jump in the repercussions of it. And Wall Street has spoken. So Wall Street says Harris won last night, and you can clearly see the easiest way to tell is DJT. DJT was trading at 1930 on Robinhood. It was trading up 70 cents last night, about 3-4 minutes into the debate. And then where DJT tanked, and I can tell you the moment it tanked, this was the exact moment, was when Trump went on the weird tangent about talking about eating dogs and cats. The DJT fell $2 straight in the next 2 minutes because I was watching it there. You won't see it on this action last night because this doesn't show the after hours because this was at 9:05, but I was watching it because I had it on my screen the whole time. That is when it started going down. So DJT really got hit. So that is pretty much when he clearly lost the debate, was just that mention because it was weird. So talking about the dogs and the cats and the eating of the animals, that was weird. And that's when Trump lost this debate. Does that mean he's losing the election? No, it's far from over, folks. I don't know what the end result's going to be here. It's close, to your point. One's 50-50, 55-49. Anything can happen in the next 45 days. But as of last night, it was Harris's night.
So let's talk Harris stocks. Let's talk Democrat stocks.
Yeah, so number one thing moving here this morning and what would be expected is clean energy. So if you're looking this morning at, clear Harris stocks, it's solar. So bring up the TAN. It is ripping this morning. It's up 2.76%. SEDG, which has been in the gutter, and I mean like the death march, just going down every single day, is having itself a day. It's up $1. Does that mean the stories, now clear, go buy SEDG? That chart looks like to me like this company's got serious problems. So I'm not even sure Harris Wind can bail this company out. But at least for one day, bulls have a little bit of relief on SEDG. The stock is trading up $1. I was actually long it overnight. I sold it already this morning. First Solar trading up significantly here, 208 to 216. Huge move. We've talked about First Solar being best of breed in solar. It's the only one that's really held up well. ENPH is up $4 here. So solar really having itself a good morning, at least off of Harris. Did that First Solar really trade 228 last night, Joel?
First Solar.
Is that right? This morning? Did it? Please tell me it didn't.
It didn't. The 228's the top of the page. Well, let me see.
Oh.
Let me go to. Let me
I
go to
don't
my.
know. That looks like a line. And that looks like a trade up there. Maybe
Let
I'm
me go.
wrong.
Let me go to my.
222. Okay, no. I'm looking at
Okay.
the line, so I'm just looking at the line. I
I
thought it was
know.
straight up there. It's
And sometimes
222.
it does. Yeah.
Still
Just
though, up
over.
222 is a bit of an overshoot, folks. To buy that thing up $16 or $14, that's
Oh.
a bit, just a bit chasing there, folks. 4 a.m. traders like to chase.
Without going through like all the technicals and all these things, you just have to go back to last November, right? Or when was the election decided? Who knows? But all those stocks did get a big pop and it didn't hold. So, you can play the momentum. If you're doing it for a day trade, look at your daily highs, look at your pre-market highs, look for some follow through off the open. I thought, Sammy made a good point yesterday about the Oracle, and only I can bring Oracle into this. He said he was going to let it shake out the first 15 minutes. He wasn't going to try and pick the top off the open. He was going to see how it was going to shake out. And if you were like patient enough to wait the first 15 minutes in that stock and put a stop below, the low of that first 15-minute bracket, I mean, it went up considerable after that. Got all the way to 160. So keep an eye on your pre-market highs for First Solar. What about pot? I guess both candidates like pot, right? So
yeah, that's
Trump
why
was
MSOS popped the other day, was because Trump came out and was basically posted on True Social with some pro cannabis stuff. So it was that's why I got popped the other day. Is MSOS up this morning?
it's up
Yeah,
3
just
pennies.
slightly. Just
Yeah.
slightly.
Well, all right.
The other thing, if you're staying with clean energy just for a second here, not that necessary, but the lithium stocks are getting a real big pop here this morning. This is not because of Harris. This is because China talking about slashing supply. So just to give you the headline here, electronic battery maker Contemporary Amperex Technology mulling at possible suspension in its massive lipidolite mine in eastern China. So this is why lithium stocks are really ripping this morning. ALB has been in the absolute gutter too. These lithium stocks have just been murdered. And I know because I was in ALB. It was one of my worst stocks from last year. Remember, I took the loss. I think I sold the thing up at like 120 or 130. But I bought it over 200. It was horrible. I'm glad I took the loss because it's now $78, which is incredible in itself. Having itself a day. So this is like the comeback day for all these stocks that have just been pure dogs. ALB popping up, LAC popping up. That's just been a disaster too. Sorry, Joel. I know you want to sell that.
Yeah,
and me and Money Mitch that stick with it.
no. I didn't listen to you guys. I never.
Oh, you did sell it. You did sell
Well,
it. Anyway.
I sold. Oh, the old hip pocket. I sold 3/4 of it or 80% of it. Keep a little bit. Keep a little bit. And then it's a little bit. And then it's less of a little bit.
I know. I have a little bit of that ALTM. I kept a little bit of that. It's a real little bit now. It's up 16% today. So boom, I get 35 cents back. But I think my average cost based on ALTM is like $7 or $8. So 35 cents ain't really helping much. So these lithium stocks just been an epic disaster. But they are popping back. That is your news. This China company slashing some supply. That is the news why they are popping this morning. But these are your biggest winners this morning. ALB, ALTM, LAC.
Well, we've got some other winners outside of the debate stocks, the ones that are up because of the debate. Let's go to Viking Therapeutics, ticker VKTX, trading higher this morning on an upgrade from JP Morgan analyst Hardik Parikh. Buy rating, price target $80. Viking Therapeutics is currently at $57.60. So obviously, sometimes you get these price targets and they're like a few bucks higher than what the stock's at already.
Yeah.
$80 is pretty significant from $57.60. It's almost, let's see, it'd be about around 30-40% gain right there. So Viking Therapeutics trading up about 5.5% this morning, $3 on this upgrade from JP Morgan.
Mixed feelings towards this stock right now. I actually had it long overnight, so I was happy about that. That was in my trading account. But I did not have this long in my long-term portfolio, and I actually wrote it down yesterday to buy this stock in my long-term portfolio. I was going to buy it at $54 or $55 because it seems like it's always a buy down here. Then it comes out with some data and it gets a pop. I feel like this is actually a good time for a rating change. I don't think it's an upgrade. I think it's just a buy rating, initiating with the buy, I believe. I don't think they covered it before. But when you get, a company that's not widely covered, and it's JP Morgan, and they give an $80 price target, it's going to pop. So happy that I made some money on my day trading account or my overnight account on it. Not happy that I didn't get this spot in my long-term account. So now I got to wait for another pullback here because one thing I've learned, never chase VKTX because it always seems to come back down eventually. They're working on their third, obviously phase 3. We're going to get some data later this year. I don't know when that's due. Some people were saying November. If you know, let me know when it's due. I was trying to look it up the other day to figure out exactly, but people are talking about November. I don't know if they have an exact date. So this obviously is also a potential. We've talked about this as a takeout candidate because there's Pfizer, Merck, number of big pharma that really don't have any skin in the game. The obesity plays, and for this, a $7 billion company or $6 billion company that's doing pretty well in their trials so far. This would get them into the game. So that's what people have speculated. Guy Adami has speculated this multiple times on CNBC. There have been other people who have speculated VKTX is eventually going to get bought out as well. I think it's possible. I don't know if it's going to happen for sure, but I think it's possible. I do like it down here in the mid 50s.
You know what? I had this on my, if we ran out of stocks to talk about, which we never do, on the sheet from yesterday, just because it looks sleepy down here. And the other reason is like you kind of had an out. Like if you were taking a poke at 53, 54, 55, you still had this level, I mean, it's a few bucks down, but support had been building at 50. This is a nice pop. Let's check out the pre-market high, 57.88. It's only 28 cents off that, so you just want to catch a bid, a nice bid off the open if you're trying to buy this off the open. I would say keep an eye on your 4-day high if you're looking for more. That's 58.38, and then your 5-day high is up at 60.27. But always with these initiations or buys or upgrades or whatever, if you're going to chase it, if you're going to get into it, make sure you get that instant gratification, having it your go away, or just a little dip, below the open and hold the opening price. So that's a look at VKTX. What's the drug? There was a drug stock the other day that had some positive news. Oh, was that SMBT?
No, it was Turn, I believe.
Turn, yeah.
TRN. And again, this one came out of nowhere. And this is the one issue. When we were playing VKTX 6 months ago or 9 months ago, there wasn't that many other small players, but now there's players popping up all over the place. And that is somewhat concerning to me as well. And I've been in Viking Therapeutics. It's been a good one where we popped it. We made some money. We've been in it. We made some money. I've day traded a lot of times. I've traded this pretty well. But again, if you've just been holding it the whole time, I mean, obviously if you got it $20 or $30, but a lot of this, time it's been trading in the 60s and, it's been leaking, then it gets positive trial and pops and then leaks back. But there is a lot of competition, a lot more competition than there was a year ago here. And that is somewhat concerning.
What about Lilly here, Dennis? I mean, I could redo the retracement there. Look at that. You have your all-time high back in July, and then you got 3 pokes at it in August and then early September. Now you're at a pretty good support, a good support level. If there's competition, then I'd be a little cautious on this one. I'd keep an eye on the 894 level. That's still $10 away. 3 lows in the same area. Conversely, keep an eye on the 915 area because you have a double top there. This is a little important consolidation matching range days here in Lilly. And with the competition, coming, I mean, there's still the kingpins. Watch out on this one. That's, matching range days, inside days, whatever you want to call it. But, a word of caution there to Lilly shareholders. Let's get.
I'm with you here, Joel, and it failed right where you don't want it to fail. Obviously, you had the vicious July sell-off, August 5th low on everything, August 5th bottom on every single stock, and then the big rally, and it came right up, bumped an all-time high a couple of times. It could not get through it, and now it's starting to leak here again. So technically, I don't love that it failed at that same spot. fundamentally, I don't love the valuation. I don't love the competition is coming for it. So I would be a seller of Lilly here. I think the news, I don't think you're going to see $1,000 anytime soon. And maybe I'm wrong. They could come right out with something else and pops up. This is a headline stock, and headlines can change it. But with the information I have today, I think Lilly could see some downside here.
All right. We haven't gotten to bank stocks yet. Talked about it off the at the intro of the show, but yesterday was a bloodbath. So this was all started by Ally Bank, which fell after the company's CFO noted credit challenges among borrowers. So the sector, was up in the morning after the difference in those capital requirements, and then after that Ally announcement, just absolutely hammered. I think Ally Financial ended up closing down 18%, I want to say, yesterday.
Yeah, unbelievable move.
Yeah, closing down around $6.99, 17.6%. Actually getting a tiny bit of a bounce this morning, up 0.7%. But all the banks got slammed yesterday. Whether you were looking at JP Morgan closed down 5%. Bank of America Bank of America really didn't go down too much compared to other banks, but Warren Buffett did continue selling. There was a filing last night after the close for Bank of America. Let's see some other ones. Let's see who else.
Yeah, so let's start, with Goldman was the one that we were concerned about on pre-market prep. It was trading down. Still, a lot of the banks were trading up. The reason we were saying, that it was trading down was that they said trading revenue, they saw it falling 10% next quarter. We talked about that. So Goldman was already looking weak. It was trading down $3. It actually opened up and opened right at the high tick. And then they just came in slamming it. But JP Morgan, then you have coming out, and you had the CEO, you had COO Daniel Pinto from JP Morgan talked about net interest income at an industry event, saying that $89.5 billion was not very reasonable in light of interest rate forecasts, and he thought their NII would be lower. So basically, cautious comments from JP Morgan as well. So you get Goldman with cautious comments the night before. Then you have the Basel stuff, and they all rip on the Basel stuff. But then you have JP Morgan come out the next morning with cautious comments. Then you have Ally come out, and Ally just harpooned everything with their commentary, because this was the comments, and I'll read it from you from yesterday. Trying to grab it here, actually. ALLY from the Pro. Sees the CFO flags consumer stress and underperformance, and he says the CFO noted intensifying credit challenges among borrowers. That's not what you want to hear when you are primarily an auto lender, that you're having intensifying credit challenges among borrowers. So that's telling you what we have been telling you on this show, is that the U.S. consumer, and consumers around the world for that matter, are still consuming. But the big ticket stuff isn't selling as well as it was. And I think that is what is happening. We've seen it with Tesla. Tesla deliveries have not been great. The reason Tesla stock is holding up is because they got a lot of other things coming. But we know, General Motors and Ford had pretty good numbers. Well, the stocks, look at the stocks yesterday, selling off and not really responding and trading low PEs. I think, it's tougher times ahead. Now, interest rates coming down are going to help these stocks, but are they going to help them immediately? That's the concern. But banks just completely reversed yesterday, the most vicious reversal I think I've ever seen, to go from JP Morgan trading up 2% in the pre-market to trading down at 1.7% yesterday. That's the biggest turn that I've ever seen in the banks, other than maybe the financial crisis.
You know what? I closed. It's so weird too, because I closed my eyes and I'm like, okay, I'm going to bring up Co-America, right? Look what that did yesterday. Look what that. That had a great day. It was so different. The Wells Fargo didn't have a good day. There was a couple other banks. I think Bank of the Ozarks, a Nate Tobick favorite. No, that got hit, but came back. It was kind of selective. Not good. Net interest income, lower interest rates, it kind of makes sense. And you got all the news, but JP Morgan, that's really what submarined the market. I believe it was around 10:30.
It was.
Yeah. Wicked. Absolutely wicked move on that. Holy mackerel.
Yeah.
But
Very wicked move. And I mean, what does this mean? Like, obviously, the Ally stuff hit General Motors hard. And you can see General Motors trading down 3-4% yesterday, and Ally and Ford trading down as well. Some people in the chat saying, well, you have to have cars, so people are going to buy cars no matter what. I'm going to be an example for you. I have an F-150. I typically trade it every 3 to 4 years. I just like having a new car. I can afford it. I like having a new car. I go and I look at the price of new cars, and I'm like, I'm just going to keep driving my other 2 cars. So right now I'm driving a 2017 and a 2018. This is about as long as I would ever go, but I'm not going in and buying a new car because you know what? And it's Canadian money here. I paid, I think, $68,000 for my F-150 in 2018. That same F-150, Joel, is 110 now. 110. I can't stomach. Like, I could afford it, but I don't want to stomach going and paying $100,000 for the same damn truck. So I'm just like, no, you know what? I'll just drive it. I'll just drive it longer. And that's what the consumers will do. If the ticket prices are too high on the stuff, they'll get them fixed. They'll drive the cars a little bit longer. And that's where the problems start for these automakers. And I think we're starting to see that.
Yeah, GM crawled its way all the way back, right, from 39 to 50, and then Kaplooey. You can just look at that move, at 11-point move. It better find support. 5.5, this 44.5, $45 area. Very important to find support there. Ford, we don't look at that very often, but Ford got hit on it as well. We got 4 minutes to the number here. Let's just
before we move on, I just want to mention something because US, you're going to find this amazing. So Canada passed this luxury tax back in, I don't know when it went into effect. I think it went into effect like September or something, just recently. Well, not September, it's September, but a couple months ago. This luxury tax, and if you buy a vehicle over $100,000. They can give you a tax on this of like up to 10% on top of it all, just because it's a luxury tax. This is how Canada is. Canada just taxes the hell out of everything. It's just the tax country. Like, we just tax. What the hell is that? So now you have everybody trying to get the cars under 100 grand. They're trying to like get them under like to 99,999. Just to get them under to try to avoid these taxes. But this is a serious issue too when you have these, vehicles that a lot of them are over 100,000, and then all of a sudden, and I know we got, this coming up, obviously it's the CPI number coming up, so I'll be quick. But I'm just saying this taxing in Canada is just out of hand. That blows my mind that we're just going to tax that too. So, anyways, that CPI is coming. I just wanted to say that, Tanner, because somebody was talking about in the chat.
All right, CPI number is coming here in a couple minutes here. It's 8:28. The CPI is expected to show 0.2% growth in August. Core CPI 0.2%. So consumer price index is supposed to come in at 0.2%. CPI year over year is supposed to come in at 2.6%. That was against 2.9% in July previously. So this would be a significant drop from 2.9 to 2.6%. Core CPI year over year is expected to be 3.2%. That would be the same as it was the previous month. Core CPI for the month of August is expected to be 0.2%. So where the bar is kind of high here. We're expecting inflation to fall. We're expecting the growth of inflation to be the lowest it's been in 3 years, is what the expectation here is from economists. We will see here in 1 minute. And we do have Blu Putnam hanging out backstage to help us break down these numbers.
High bar, very high bar. But if you look at some of the commodity prices, especially oil here, of course, when the reading is taken is a whole different thing. But commodity prices have been pretty stable. Here's the technical setup for you. Yesterday's high and close, we never even came near that yesterday. So the onus is on the bulls to get us over 55.06, get us up to Friday's high at 55.3250. It's hard for me to find support here, and folks, we'll just look at the pre-market low at 54.71. That's way above the low from yesterday. We are coming up on 5 seconds. Let's see what the algo jumpers are going to do for this. Important to take out yesterday's high on the upside. Oh, high bar. Maybe was not met. We did immediate knee-jerk reaction down, but the buy the dippers came in. We didn't take out the pre-market low.
All right, CPI for August, 0.2 came in at 0.2%. That was versus the 0.2% expectations. US CPI year over year, 2.5%, in line with estimates of 2.5%. I think the numbers were slightly different. The expectation was I had 2.6%, but Pro was saying 2.5% was the expectation. Core CPI month over month, Joel, this is the part that came in a little hot. 0.3% versus 0.2%. So pretty much everything came in line except for this core CPI month over month came in at 0.1% higher, 0.3% versus 0.2%. So all in all, I mean, the numbers are showing that inflation did continue to fall like people were expecting.
Just but not as much. But
yeah.
not as much. You have a high bar here. And as we were saying before, with all the news you had yesterday and the banks and everything, to have this market back up 55, near 5,500, doesn't look like we hit that. We're able to get under that low bar here. Not much of a knee-jerk reaction to the upside, as you can tell on the 1 minute chart here. Just took out the pre-market low. Folks, I just have to tell you, yesterday's low was 55.48 1/4. That's another 25 handles down from here. So it's a choppy, wicked market here. But initial reaction, even though it was in line, they weren't happy with the overall numbers. But you know what? We're not the expert on this. We have a special guest coming on, the chief economist for PreMarket Prep. He's none other than Blu Putnam. Roll the intro, and we'll bring Blu right on. Okay, Blu, if that's not a good introduction, then you're going to have to write your own next time.
Okay, I will.
Okay, and I got you. Do we want to rip through the slides first, or do you want to give an overall comment first?
Let's rip through the slides because they'll give us the comment. This is from before the data came out. So consumer, 2.5. That's a nice little drop toward that red line of 2. So that's year over year. The thing you have to remember about year over year is what drops off the back end is equally important as to what shows up on the front end. But a 0.2 a month, multiply by 12, add a little compounding, that's 2.5% a year. So that's really not a bad place. So, that's a positive year over year number for sure.
All right, everyone talks about shelter, very important shelter inflation in the CPI through July. Here we go. We were at 5.03. Don't know where it came out for this month here, but a big component of inflation. We know about housing prices, lack of supply, increasing demand. Let's talk about the shelter component of the CPI.
Well, if you want to know why the core was 0.3 and the overall was 0.2, all you need to look at is shelter. Shelter's been lagging on the way. It's coming down. It's just been lagging. I think we'll have under a 4 year-on-year handle, or 4 something when we see the data. But so shelter, we know it lags. And so you shouldn't put too much onto that 0.3.
All right, the Fed's key component, the PCE core inflation year over year, giving us a historical perspective. And then I like the couple question marks there at the end. Always keep us guessing.
Well, with this CPI, you're going to get another reasonably decent print on the PCE core at the end of the month. Now, the end of the month is after the Fed meeting. And actually, we're going to get 2 PCE core readings before the November Fed meeting. So they'll get a chance. But, it's heading to the 2.5 territory, and it's going to probably be a little sticky at 2.5. There's nothing wrong with 2.5. I understand the Fed's target is 2. But if you're a pretty good economist, you know that 2 means 1.5 to 2.5. So we've made the range. The idea that economists are very specific to the decimal point is it's a big misconception.
Okay. All right, moving on here. Oh, the good old CME Fed Watch tool. Well, this has probably changed. Maybe Aaron, you could bring it up and see where it's at here. I was not in the half camp, not in the half. I wasn't even in the hike or the lower camp at all. But does this cement a quarter here, or do you think they'll do the backstroke on this and maybe just say no cut for you?
Well, this is from last night, and essentially 65.35 or 66.34, with the heavier emphasis on the 25 basis point. I think this inflation number for me, and I don't know what the market's doing right now on Fed funds, but for me, this keeps us emphasizing the 25 basis point, mainly because there's no rush. The Fed is definitely behind. The 10-year has already moved. The mortgage rates have already moved. We're already getting the benefit to the economy from shifting to cutting rates. So the Fed's late, but there's no real cost and there's no huge benefit of going fast. And in fact, there's a negative to going fast, and that is if you do 50 basis points, you could signal that you're way more worried about the economy than you are. And if the Fed signals that they're worried, that everybody else is going to be worried too. What do they know that we don't know? Well, they don't know much that we don't know, but you may not know that.
They may know less than we know.
Yeah. So we'll see how this goes, but I think I would look at this number and say it supports 25 basis point cut.
Yeah, the CME Watch tool now is showing 29% chance at a 50 basis point cut, 71% chance as a quarter cut. So it hasn't changed too much from your screenshot there. And then Blue, here we're looking at the dot plot, the Fed rate change expectations by mid-2025. What are we looking at here?
Well, these are how many 25 basis point cuts the market is thinking about by the end of 2024 or by mid-2025. Interestingly, the end of 2024, we're looking for a full 1% cut. That's 425 basis points. You don't get that at 25 basis points a meeting because guess what? We only have 3 meetings left. And by the way, I really don't think they're going to do anything on the November meeting except talk about the election results. If they only go 25 in September 18, then I don't think we're still going to be looking at a full percentage point by the end of the year. Now, what's interesting though, while we've held pretty steady, in the last couple of weeks at looking for a full percent point by the end of this year, we have gotten much more aggressive on the cuts through next summer. 9 cuts, so that's 2.25% when we were talking about 7, and not that long ago 5. So what people have been doing is saying, hey, wait a minute, I might be a little worried about a recession, but the inflation numbers are pretty good. They've got room to cut. And so, most people are not so much saying it has to be right now, but they're pushing their forecasts into early next year, as in, cut.
9 cuts through September of 25. We're 200. We're 200 points away from all-time high in the S&P, and this chart is telling us that we're going into a depression. I don't get it, Blue. I don't get it, Blue.
2% off 5.5, 5.25, knock out 2%. You're down to 3.25. If inflation's really 2.5%, that's okay. That's still 1% higher than inflation. Here's your point about recession, though. This is my calculation now. We're not doing this isn't from the CME website. And my calculation is we actually have 2 scenarios, just like you suggested. By middle of next year, if we're in a recession, we're going to be down there close to 3%, 3.25, 3%. If we don't have a recession, I think we're going to be closer to 4%, 3.75, 4. So we've still got a lot of debate to go as we go over the next couple of months about whether there'll be a recession or not. And I'm in the camp that there will not be a recession. I look at all the jobs data, and what I see is we've gotten through the post-pandemic job surge, and we're finding a new equilibrium. It's a little slower than 2018, 2019, but it's not a recession.
And what's wrong with interest rates just staying steady? The people with the fixed income, let everyone make a little bit of money in the market. And I think that's kind of the mantra that I've been looking at is like, hey, give banks a chance, to do, equilibrium, find a rate, find a stable rate. We could talk about the banking news after this, but yeah, it mixed market here. I mean, I think those days are like people looking for these like ridiculously low rates. You saw what that happened. We did that because of a very weird situation, with the pandemic. I mean, I don't think we could ever go back down to those rates. But all right, Blue, that's the end of the charts that we have for you. I don't know if we have any questions coming from the chat or not. But we'll let you give some final comments. I just want to talk about that move in the financials yesterday, and the implications for that.
Well, let me comment on whether rates might end up. If we do not have a recession, you probably want the Fed funds rate to be a little higher than the prevailing inflation rate, at least 1%. And you'd like to see the yield curve have a slightly positive slope, which means the Fed funds rate would be beneath the 10-year rate. And that's what you get when you get down into the low threes. But the implication here is we've had most of the move in the 10-year. We're down to 360, 370 on the 10s. So we've already, giving the mortgage market some help. That's going to help the economy a little bit. So, I think if we don't have a recession, the Fed can take it slow, but they probably would like to see a slightly positive yield curve, and they'd like to see the Fed funds rate a touch above the prevailing inflation rate. So I think that's where they're headed into next year. But they have a tendency to go slow unless there's something bad happening in the economy, and I don't see that.
All right, well, Blu Putnam, we've been on the line. Always great to have you on these big days, on CPI days, anytime we get good economic data. I think this is the second time we've had you on in the last few shows. So everyone smash the like for Blu. Blu, enjoy the rest of your day, and we'll catch up soon.
Thank you.
All righty, Joel, can we get an update on the market? How we doing?
Yeah, there we go. Added me to the stage. I would say that whatever the numbers are, I think the Bears are a little bit in control here. As we were saying before it started, where we were at on Friday, the sell-off on Monday, the Monday rally where we thought we would fade, the Tuesday rally, it did faded, but it came all the way back. I think this is a really important day in the some days are more important than others, but I mean, if somehow this market can claw back, which it did yesterday. I was absolutely amazed at that intraday rally that we had. I'm looking at the chart here on the 15-minute. I'll move this back over to me. And then to have that close, it was over 5,500. But, man, the sellers are out right after that. Right at like 4:01. They were right down that last after hours print. So I think after the price action for the last 2 days, down 25 handles is really, really not much at all. The bulls can like pull this thing up by the bootstraps, get back over 5,500 on the day. I'll be super impressed at that, and say that low from Friday. I don't want to say it's the start of another we had a 600-point move, but I don't want to go all Craig Johnson on you and go 5,400 to 6,000. But the bulls are definitely making a stand.
I think you're going to see the bulls make a stand in tech. I feel like we're getting back into the market that we were in before, and I wouldn't be surprised, just looking at a little longer term, but I wouldn't be surprised if this market here goes out the same way it came in. And that was, we want tech and we don't care about anything else. What I'm seeing this morning, obviously NVIDIA's got commentary, Jensen Wong speaking here this morning, but NVIDIA is trading the green. Amazon is trading the green. Google is barely in the red. Apple's down a little bit. Microsoft's down a little bit. Tesla's holding up well considering obviously the Trump debacle last night. We're seeing tech hold up pretty well. What you're seeing sold here this morning, banks again. You're seeing sold here this morning a lot of small caps, the IWM. I feel like we could go back to that market where tech leads us out of this. I think it's not going to be, and everybody's calling for the catch-up trade. And it's going to be the small caps time, and it's going to be all these laggards in the market that turn us around. And this has been the story, people have been trying to gravitate to for a very long time, and it's just tech that leads us out. I kind of feel like tech's going to lead us out of here again. So I think on pullbacks here, you're still looking at buying tech stocks.
Interesting. Yep. Interesting commentary, because we were talking about the lag factor when we got up near the all-time highs, just recently, week and a half, 2 weeks ago. And what we noted was, wow, tech wasn't there. Microsoft way off its all-time high. Apple and Meta holding up better. Google, an absolute, disaster. I mean, I don't know what to think. I mean, I guess of all the ones, the worst relative strength has been in Google. You can't find anything that is this far below its August 5th low. Apple Apple just seems to shrug the news off. They had the event, they weren't happy with the event, and then they get hit. How many times do they get hit with that Ireland fine? I mean, it seems like it's always, now it's official, but then you hear an appeal. For you Apple traders, you got a good level to lean on if you're attempting to buy the dip here. You got a pair of lows just under the 217 area at 216.71 and 216.73.
All right, a couple earnings stocks to go through from last night. We'll start with the good, and then we'll get into some not so good. Let's go to Dave and Buster's, ticker PLAY, PLAY. Stock up more than 11% after the earnings. Dave and Buster's reported EPS of $1.12, which beat by 26 cents. Revenue came in at $557 million, which beat by $3.5 million. Not everything was great. Like same store sales, I think were down year over year for Dave & Buster's, but the actual, clearly the revenue and the EPS exceeded expectations. Stock is going, up 11.5%. BMO Capital maintains outperform, lowers price target to $55. So again, going into this report, there were some things that were maybe not perfect, but overall good report.
But bar on the ground. They
Correct.
Simply had to step over the bar. This stock has been an epic disaster. And this not the tale of two markets, Joel. You have obviously tech, which has had a very good year. Semis, even though despite the recent 20% sell-off, still, your strongest sector on the year. And then you've got like all these other companies that are just relentless selling, and some of these are very crappy companies like Big Lots going bankrupt, but Dave and Buster's, it's like pretty fun place to go. But no, I don't know if consumers are spending less or what it is, but there's a slowdown at play. I mean, the stock $70 to $29 this year. That is a serious sell-off. And I was just looking through charts last night. Have you seen the advanced auto parts chart? AAP? And again, worst of breed.
Oh my gosh.
This is just the definition. This is like, if you can learn anything today, learn this. Don't buy worst of breed stocks ever. Ever, ever, ever. I did it with Intel, believe me. I still do it. So you have to keep telling yourself that. If the stock is worst of breed, don't touch it. O'Reilly, near all-time highs. AutoZone, not far from all-time highs. There can't be three, apparently, because Advanced Auto Parts is $38. It goes down every day. Like, look at how smooth in the last 10 trading sessions. It just clearly goes down. Well, how many days is it down in a row?
12.
12 days down in a row. After a gap down from earnings, then it falls another 12 days in a row. Don't buy dips on laggard stocks. That as well. Buy dips on stocks that are in uptrends, not downtrends. Lots to learn here. Wow. And then Elf Beauty.
Wait, Dennis, before you move on to this one. Yeah. It's had 12 lower highs 11 of 12 lower lows and 12 lower closes. This is not investment advice, but this is one of the most bullish charts I've ever seen.
The trend is absolutely your enemy here. It is not even about being your friend. It is your enemy. The trend is your enemy here. Enemy. Holy.
Hey,
again, it's oversold. It could have a bounce. But if you're saying that at 50, at 40, now 38, an elf beauty. This one has went from the bliss of all bliss to the piss of all piss. It feels like in a snap. In 2 months, this stock went from all-time highs, dang close to all-time highs, if not all-time highs. Really close. It didn't quite get back to the 221 that it got back to earlier in the year. But 219, a buck away. So basically from all-time highs to cut in half. And it goes down every day. It got upgraded yesterday. The bloody stock got upgraded yesterday and closed down $3. This is just the worst story of stories. Wow, I can't even believe it.
I know, Alf. I saw that, and I don't know if we got a chance to mention it on the show. But Warren's not worried. Let's see how all the Alta's doing. That had been a shift. I mean, you see those moves and they rally, and you're thinking, oh, what an easy short. And then you just get run over. And then once they turn, they turn. Dennis, we did pick up a little route. We picking up steam here, man. Those pesky bulls, they just won't go away. They're listening to pre-market prep here.
But listen, it's the tale of two markets. So just as much as I said, what I say 5 minutes ago, it's probably going to be tech that leads us out. Now, Meta has went green. Amazon has went more green. Nvidia has went more green. Google is now green. Apple is almost green. Microsoft is going green. What is leading us out of here? 7 minutes after I just said it. It's tech starting to lead us out. The market goes back to those stocks because they see what happens when you start straying away from those stocks. You get into these epic bullshit disasters. Celsius. Oh, yeah. The drink stock. It's hot. Oh, everybody's drinking these Celsius. Going to the moon. No, it's not. You know why? It's not a tech stock. It's not a tech stock, and it doesn't have a lasting story. And here you are, $92 to $32. The growth slows just a smidgen of slowing growth. And boom, we kill you 70%.
Also, you
tech, man. And maybe tech's going to wreck us like this one day too. But what has worked all year really has been tech. And all this other crap has not worked.
What about you talk about the tale of two markets? I mean, look at look at Walmart, okay, and then look at your dollar stores. I mean, they're not exactly correlated, but I mean, look at DJ. Everyone's going to Walmart. Look at Dollar General just hanging out. Look at that. After that kind of drop, a little bit of consolidation here. The same with Dollar Tree. I mean, it's just a tale, even within the same sectors. What is coal under $20? Yep. Coal 1952. Nordstrom, we heard for the 100th time that they're going to take it out at 23. Macy's here. Look at that. 14. What about the real estate in Macy's?
There's so many bad stories here. It's like you've got tech. And people can say, oh, there's lots more stocks rallying than the Magnificent Seven. Yeah, tech. There's lots of tech stocks. If you take tech away, there's some stories. There's a few things. Eli Lilly, weight loss. But there are so many disaster stories this year. Like somebody was saying, oh, you're talking bearish over here. Well, the S&P is only 3% off the highs. You go tell the Elf Beauty guy that bought. You go tell the Celsius person that bought that we're 3% off the highs. You go tell the Macy's investors and and just the sectors go on and on. There is probably, of the S&P 500, there's probably 100 or 200 stocks that are in full-on bear markets and just relentless sellers on them. So you have the tale of two markets here, folks. And don't kid yourself, tech has held us up. It has been tech holding us up. And everything, a lot of other things, not everything. I said, weight loss and the drug stock's been okay. But there's been a lot of disasters here this year. This has not been a bull market where you just blindly close your eyes and buy any stock and they go up. It has been the opposite. It's been a stock picker's market.
All right, we did the earnings for Dave & Buster's. I mentioned there was one that was not so great. Let's go over to GameStop, ticker GME. We haven't talked GameStop in a while. I don't know if Roaring Kitty is around still. GameStop reported an EPS of 1 cent, beat by 10 cents. Revenue of $798 million, missed by about $97 million there. And then the company, let's see. Did we get I'm going to try to find the exact details. Didn't you say there was an offering, Dennis?
Yeah, this is just this stock. So I'm going to tell, they did another offering. The thing's got $4 billion in cash. It's $10 a share in cash. But they don't know what the hell they're doing because they're closing stores. They don't know what they are. So they're like, you know what their business model is? And I tweeted out last night, we do offerings, sell stock to retail, and raise cash. And then we burn a little bit in our stores because all the stores suck. They do. They all suck. So they try to close the stores. They're trying to reinvent themselves. And maybe one day they do reinvent themselves because they are building up a cash hoard. So they literally have, like people are saying this is a zero. It's not a zero, folks, because retail bailed this company out. It should have been a zero, but retail bailed it out. So, it goes to show you, that little movement that they did worked. But what are they doing with this cash? Like, I don't know what the hoard is. So maybe they're going to come up with something AI or something related. Maybe, they're working on something. Ryan Cohen's working on something. I don't know. But I tell you, it's absolutely shocking when you got a company that just is sitting on a hoard of cash and they do another offering to raise more cash yet. So maybe they got something really cool cooking. But I mean, this is the business model. We just raise cash and, we do offerings to raise cash. That's all they're doing right now.
It's been in a trading range, bumping up against 25, and you can look. There were buyers here at 20 at the end of August, and the August 5th low was 1873. So, if you're thinking of reloading and hoping for a tweet from Roaring Kitty, you see if you can get a sustained bid at the $20 area. Just the way this stock is so loved, I don't know if I'd be shorting it down 281. Holy mackerel!
I wouldn't short it. You got $10 in cash here, so you've got a floor, like $10 lower. I mean, and we don't know what they're working on. So I do think they're working on. There's probably a play to buy this stock on this dip. Honestly, I mean, this is just the way this works. They do that thing. The stock comes in, then it starts to go up. But one thing to consider, and I mean, I'm not saying go out there and buy. I'm saying there's a possibility to go out here and buy GME, but one I forget where I was going to go with that, but bottom line is this company just does offerings when they don't even need to do offerings. They're probably working on something pretty cool. But if you're in a stock and your whole portfolio is dependent on a kitty doing a tweet, then you need to reanalyze your entire investment philosophy. So if you are buying stocks simply waiting for the next tweet, you need to reanalyze how you're doing it because that is just ridiculous. Now, I'm not saying it can't go up on a tweet. It does. And if it goes up on the tweet, maybe there's an opportunity to buy the stock. But if you're sitting around here just waiting for the next Roaring Kitty tweet and your portfolio is going down, you've seen GME down 10% today, you're like, please tweet. Oh, say something. Bail me out. Move on to something else. You cannot be sitting here waiting for memes to come and save you. Because this is not the way the market works.
You know what? I have a way to be the most unpopular person on the internet. I'm going to say maybe there's a take under.
I don't think anybody's coming to take under this.
Like 15
I don't
bucks.
think anybody's
what
coming
if they
to
offer 15?
There's nothing to take over, Joel. I'm sorry. There's nothing to take over here. And the biggest issue is because it's just cash. You're buying cash. There's $10 in cash, but maybe they're cooking up something else. Maybe there's something else going on. I think that's what they're going to say. Maybe it's 11 or 9, or I don't know what it adds up. They're $4 billion in cash. So you sit there and do the math. That's what you're buying. If you're buying GameStop right now, you're buying cash. You're getting $10 worth of cash on $20 stock. But maybe they're going to work on something. Maybe they're going to come with some cool story. No, if you're a believer in story, the stories in GME drive price way more than any other stock. So memes can drive this for crying out loud. So I don't think you come in here and you just sell and say it's going to $10 because you don't know what the hell they're going to say. And memes drive this thing up 30% on a meme. So, I mean, it's a very dangerous stock to be long or short, really.
Yeah, a take under is just like they're trading at $21. Someone comes and says, "I'll buy you for 17." That under the we've seen that happen
Ryan
before.
Cohen isn't doing that.
Yeah, no
There's
one's
no
doing that.
way. They're a story stock. They're probably gonna come out with something like AI or something. They're probably working on something. I'm not joking, because Ryan Cohen's all about a story. They're probably working on something in the background. You memesters probably follow this more closely than I do, but I think they're probably working on something.
All right, we are bumping up against the 9 o'clock hour here. AB, I'll let you take over 1 second. I was maybe hoping to get back to 5,500 by the end of the day. Well, look at that. We just came back. We are trying to get unchanged on the session. So Dennis was talking. They were buying. Now Google up 50 cents.
All the tech
NVIDIA
going.
up. They would take tech. So keep
I
an eye
saved
on
this
your tech.
market.
You did again.
I had saved this market with the tech conversation. Just kidding. But I mean, the market, you could see it. You could see buyers coming in. This is about what tape reading is. This is what stuff, like this is how you learn. Like reading the tape and understanding. I look at the tape and I look at what's happening. I have my quotes up there and I'm like, you can see pockets of like what's happening. And you can see the money. When you're reading the tape, you can see the money move from one sector to the other. You can physically just see it happening. And they're moving out of this and they're like, ooh, I kind of want to go into tech. And you start seeing one little tech stock pop up and then another little tech stock and a little pocket of green. Oh, Nvidia's up a little bit. Oh, and then Apple's up, Microsoft, Meta's up, Google up, Amazon, Netflix up. Rewind the tape 15 minutes ago. There was 2 of them up. Now there's 6 of them up. And Tesla's only down 30 cents. Tesla, who has been supporting Trump and Trump had a disaster night, is trying to go green.
Well, Dennis, I told you, I made this another tongue-in-cheek comment here. This is a election-proof stock. Because
Maybe.
it's
because
getting
of the Dems get in, they support clean energy anyways.
Yeah.
And if Trump gets in, well, he's just all supporting Trump. Maybe Tesla wins no matter what.
Okay, a lot of tongue-in-cheek comments made today. Not investment advice. Please stress that. None of this is investment advice. AB, what do you got for us?
That will just about do it here on today's episode of Pre-Market Prep. Joel, who do we got coming on with us? Who do we got coming on with us tomorrow?
Jim Tassoni. Jim's going to come on with his calm, cool, and collected approach instead of all this ranting by me and Dennis. AB, we kind of shut you out today. Sorry about that.
All good. All right.
Well, that's all for today.